Hi, this is James from McKayResearch, back with another video. This week, it's part 2 of my appearance on the Genesis Block Education podcast with Malcolm Atuona. So in this second part of the conversation with Malcolm, we discuss some of the current applications of blockchain in industry, as well as some interesting synergies with existing and rapidly developing Industry 4.0 technologies. And we also look at what the future holds, both in terms of how Bitcoin will fare as an investment, as well as the future of blockchain taking a more central role in the development of industry. So I hope you enjoyed the second part of my appearance on the GB podcast. Again, I'll be leaving information on Genesis Block Education in the description below. And let's roll the tape.
Let's just jump back to blockchain, because obviously that is the title, is blockchain hype. So I just want to talk about blockchain in terms of real world applications. Now, 2016, 2017, blockchain was everywhere. It was, everybody was a blockchain salesman in terms of what blockchain could do in terms of world solutions. Have we moved on from where we were in 2016, 2017? What are the real solutions that we're starting to see come out which are underpinned by blockchain? Or are we in fact seeing anything? So I just want to really kind of go back to blockchain. What are we seeing in terms of blockchain solutions? Is there a killer app on blockchain yet?
Well, that's a really good question. I think probably to preface any conversation on that, I always go back to that. I think it's Roy Amara who said that innovative technologies, they always tend to be overestimated in the short term, but underestimated in the long term.
Okay.
And I really think that's true again in the case of blockchain. And in my personal opinion, I think that the fact that all the hype has sort of dissipated and died down over the last year and a half is definitely a positive thing.
Right, I agreed.
Because it's basically, as you say, it was a lot of people trying to sell you a story. Everything was blockchain. We're basically reinventing the wheel in name your industry by using a blockchain solution, whatever else. But now I think it's become increasingly clear that the failure rate has been extraordinarily high for startups. I think I read in a study that Deloitte did maybe a year and a half or 2 years ago. They came out with a figure that of all the blockchain startups that have gone online for in the last 3 years, I think there was a failure rate of around 90%.
And what was sounded out as the major drivers behind the failures?
Two things: technological solutions in search of a problem. So that's become a bit of a cliche of sorts. But I think in the case of blockchain, it's absolutely true that the amount of VC activity in the space has sort of skyrocketed at around 2017, 2018.
Yeah, huge.
A lot of people were cashing in on that, and it's a little. I liken it a little bit to artificial intelligence. I heard a really interesting interview by an AI expert recently where they basically said, well, all the stuff that you hear about artificial intelligence, yes, it exists as a technology, but all those people saying they use it, they don't really actually use it. It's the furthest thing from AI. They have like a few things on machine learning that they basically scale up and overhype and sell this promise to a prospective buyer of coming up with a new innovation or solution that's basically built around AI, which is far from the case.
Yeah,
I think what we had in the blockchain space again was very, very similar to that. That a lot of these companies, if you actually looked under the bonnet, so to speak, there wasn't actually a lot there that was an integrated blockchain solution that solved an actual problem. It was instead using some form of a database, or that you were cryptographically hashing from a database and calling that blockchain. There were all sorts of shenanigans that uncovered that people were
Excel
using.
spreadsheets, did it?
Yes, to attract the interest of VC. And I think now what we're seeing is that the real world use cases are being explored like in a lot more depth. They're going beyond proof of concept and actually trying to come round to production grade solutions across quite a few different industries. So that is, I think that's promising. A lot of people say that is it's evidence that blockchain was all hype to begin with, and there's no value to it. I disagree. I take the view that it was necessary for that to happen, but the market did what the market should do, which is flush out the excess, the viable companies that weren't viable are now doing something else. So
yeah,
no, I think that's sort of the setup. I think you also asked me about what am I personally interested in, and like what have I been tracking in terms of blockchain?
Yeah, in terms of projects, whether it's agriculture, supply chain, insurance, even 3D printing. What's happening in the space?
Yeah, there's a lot going on. One of them is to do more with the social impact, and we were talking before about the Bitcoin as a social good. Well, of course, the same can be said of some of the blockchain projects as well. So there's one that I like called AgriLedger, which is basically a framework of integrated services that the idea is to even out the playing field for farmers and cooperatives.
Okay.
And so obviously, as a significant amount of the food that ends up on our tables over here in the West and elsewhere, comes from much poorer countries. And often picked by women as well. Often in very difficult and precarious circumstances. So the idea behind it is that you've got to work towards the buying and selling and sharing of things to level out the playing field using a blockchain solution. So you've got cryptographic data that's produced via this this application of smart contracts. And so, for example, I read recently they launched a blockchain ecosystem in the Caribbean that was specifically designed around Haitian farmers.
Oh wow!
And so what they did was just basically trying to add transparency to the supply chain, the agri supply chain, to create like a fairer pricing mechanism for the suppliers and the retailers in the region. And so what it does is that the platform assigns all the farmers who are enrolled in the system, they get assigned with a digital ID number.
Okay.
And so they basically gives them access to the supply chain and access to the financial services, the logistics, the insurance and other services as well. And through that, through that system, the farmers can tokenize their products, and so have access to peer-to-peer dealing as well. So there you have a situation where the platform uses blockchain to lower friction, so to speak, in the overall supply chain, to what I say is to revitalize the value chain, because often people use the term supply chain and value chain interchangeably, but they're not in this case, because if you make the supply chain more efficient, of course, then you can, as I say, you can revitalize the value chain and redistribute the value chain in ways that are fair and more equitable.
Yeah.
And also making it possible to link up producers of the agri products themselves to the actual end user in ways that weren't possible before. So I mean that has real potential. That is something that has legs. That is something that has real world potential, and that also is something that I think we can all look at as an example of, once again, technology can be used. It is a blunt instrument. It can be used for bad. It can be used for selfish purposes, but it can also be used for expanding cooperatives and to level the playing field in ways that weren't necessarily possible before. So that's one example of agribusiness. One area that I've been looking at closely as part of my deep dive into the fourth industrial revolution, Industry 4.0 space, has been 3D printing. There's been a lot going on in that space as well. In context, I mean, the 3D printing space obviously it's a highly disruptive technology.
Yeah,
and like the union of being able to 3D print something in blockchain is becoming increasingly important from a financial and economic standpoint from the original equipment manufacturers, simply because of the decline of the traditional print industry with the move to digital. So a lot of the the big OEMs like HP, for example, or Xerox, they found themselves in a situation where they've had to pivot slightly, and they've actually deployed significant resources into blockchain R&D to move into that area and into 3D printing. So just to give you an example, one thing that I read recently in the aviation industry, a company called Moog. I mean, they're in the business of manufacturing spare parts and components for aircraft.
Yeah,
and so their proposition is to combine blockchain and 3D printing rather in a way that hasn't been done before, with the goal of speeding up basically the production and the approval of replacement parts. And the reason why that's of significance is because it's one of those markets that's heavily regulated, and the sales of aircraft components they require certification from the FAA, which I think is the Federal Aviation Administration, as well as a host of other agencies, and it's very time consuming. There's a lot of red tape involved. And so here, the idea is the ability of blockchain to authenticate the transactions and streamline the processes across large networks involving the different partners in the ecosystem can really massively speed up the process. So that was one company that I looked in a little bit more detail as to what they were doing, and it looked like it was a very interesting application and use case.
So we've seen
obviously now COVID has hit. I'm not really sure to what degree that's going to be. As in demand as it was before.
Bit of a spanner in the works, isn't it? COVID.
Exactly.
Are we seeing governments really adopt this technology? I mean, apart from sort of the Chinese government releasing a digital blockchain-based currency, are we seeing any other sort of examples of governments utilizing it, whether it's for voting or for anything else?
There's definitely evidence that governments are moving into it. I mean, I think that a lot of people have asked themselves, why are we seeing governments so slow and so late to embrace the technology? And I think obviously there's definitely a parallel there between what we've seen in the cryptocurrency space. Their failure to get on top of the regulation, I think, is closely correlated with their lack of ambition and drive to leverage blockchain technology for their own purposes. So they've always been slow to embrace new tech, and that's for basically because governments are always slower to do it because of the innovation risk associated with developing unproven technologies, and they tend to be massively bureaucratic as well, which slows everything down. And that's not even to mention the fact that they're a lot of them are self-preservationists, and they tend to focus on elections. So a long-term technological infrastructural development sometimes just isn't of interest. But I mean, it's definitely changing. I mean, I actually dug up some stats for you on this.
Oh, fantastic!
And I've got my notes here. In the US, for example, this is data from the IDC, and they've estimated that for the US federal government, the blockchain initiatives are on track to exceed $123.5 million by 2022.
Oh wow!
Okay? So this data is a little bit old now. It's at least a year old. So I think the goalposts may have moved on this, but it's probably in the ballpark. But that represents a 1,000% increase over 2017, where it was 10.7 billion, for example. And similarly, blockchain spending in state and local governments in the US was anticipated to grow from 4.4 million in 2017 to 48.2 million in 2022. So again, that's a huge increase, and it's happening there, and it's happening in governments that also tend to be more up to speed embracing new technology, like, you've heard what's going on in Switzerland, for example, or Estonia is another good example.
Yeah.
In Switzerland, I mean, that's a country I grew up there for many years, so that's close to my heart.
Okay.
And they've made large strides in blockchain R&D at implementing the solutions at a state level. So, for example, Geneva, they've invested quite heavily in blockchain systems, and they are almost sort of the leaders in blockchain in Switzerland.
Oh, wow. Did not know that.
The middle of the country, in Zug, is known as the crypto capital. I think it's called Crypto Valley.
Yeah, there's a crypto town. I can't remember what it's called in Switzerland.
Yeah, that is probably Zug. That is probably Zug.
Yeah.
And Geneva tends to be a little bit more involved in sort of the government adoption of blockchain systems. So one example that I remember from them is that they've looked at they've kind of had like a 2 or 3 pronged approach to get better operational efficiency through blockchain, and so it's business integration business registration. I remember as one point.
Yeah.
They're also looking at it from a digital identity point of view, and also from an official document ID point of view as well. So they've teamed up with different groups in the area. So, for example, Geneva's commercial registry teamed up with the Genève Lab, which is like an IT R&D outfit in the region, along with other public services bodies to develop this. And so they've looked at using Ethereum mainly, and the idea is that again, like in many use cases, the platform should allow or does allow for for less friction in the flow of transaction data, and they're looking at cutting out like a lot of labor and time intensive bureaucratic processes like that involve public notaries, tax registration, bank loans, etc.
Right. Okay.
So it is happening. Obviously, it tends to fly under the radar a lot more than in the crypto space, which is not hard, because it's obviously a pretty high bar, because that's breakneck tempo. But it's coming as well. And at one point, I think for governments, the idea is that it will get to a point where in a few years, when these systems go online and are mass produced, that you won't even be aware that you're using a blockchain solution.
Yeah, exactly. Totally.
Yeah.
That's
digital
when
identity.
It hits mass adoption once the normal man in the street doesn't even know they're using a blockchain-based solution, right? Definitely.
It's definitely going to get to that point. I mean, we're a long way off, but I think that's the way that we're headed. I think if this thing didn't have legs, I think it would have just fallen by the wayside already. But the fact that the momentum continues to build, both in the crypto space and in the blockchain application space, and the fact that on the implementation level, there's a lot of progress that's being made in terms of the applications that are possible to be built on top of Ethereum, say, for example. You've probably heard all about the Ethereum 2 and how that's going to change the way that you can create microeconomies through staking. I mean, all of that there's a lot to be excited about in the space. And particularly now where there's a lot less hype around, and you actually have people who are, you've got a lot more straight talkers around, and they can actually walk you through the steps as to why something actually has value in the first place.
So it sounds like the 2016, 2017 is wearing off, and hopium is going away, and now we're starting to see real tangible examples. What do we see as the major challenges or constraints with blockchain technology? And when I talk about that, I'm talking about sort of legal issues, whether it's GDPR. What are the major challenges ahead?
I sort of agree with your point about sort of the Internet of Value. Yes, it is indeed the Internet of Value, but I think increasingly people are doing a bit of research and getting the understanding as to why it is called that, and that there are merits to those positions. So I think we're definitely in a healthy space, but as you say, there are, like with any developing or fledgling technologies, there are headwinds. In the case of blockchain, the key issue that I think people look at is just a lack of interoperability. That is one that comes up again and again, and I know that there has been a lot of progress that's been made, but there's still a lot of work that has to be done to combat that, so that you have different blockchains that can all talk to each other, even though they have different algorithms, different protocols, etc. Progress needs to be made in that area, because if you want to deploy a solution, it's got to work with other solutions, and otherwise there's no way forward for those people to come together and build something that will actually be a long-lasting benefit. So definitely a lot of work to be done there. But there are a lot of big name service providers, your Oracles, your IBMs that are actively lobbying for more industry support for cross industry platforms for blockchain. So that's definitely a major one. One that in my opinion tends to be a little bit overlooked is just relative to other technologies. There's just a lack of decision-making data. Simply because it hasn't been around for that long. 10 years ago, nobody was talking about blockchain for business. We just witnessed the birth of blockchain through Bitcoin just months prior. Fast forward to the present day, everybody's talking about it, but we don't really have a lot of data on which to base decisions. The lack of data just basically presents challenges to be able to assess the ROI, and that basically increases the level of perceived risk and investment risk. And in a way, really closely linked to that is the fact that because of the hype train that Bitcoin and in a way blockchain has been on for the last few years, a significant number of executives still think that the technology is overhyped. And so we have a situation where for other innovative technologies like the Internet of Things, and even things like 3D printing that are run 24/7, you've got reams and reams of data on which to base investment decisions. That doesn't really exist for blockchain. So as time goes on, and as I think more information comes online and is sort of de-siloed and shared, I think we're going to see sort of an increase in investment activity, and a decrease in an increase in appetite for the technology, put it that way. And the final point on that maybe is to say that one of the signposts of the concerns around the investment risk is the rise of consortia around in different industries, in trade, in insurance, and many other industries, reflects the fact that that a lot of companies want to pool their resources and come together, sit down at the same table.
And mitigate risk as well. Right?
Exactly. They want to come together to mitigate risk. Obviously, there are pros and cons for consortia. The number one being that you kind of don't have as much control as to how these things are developed. But of course, you get to come to the table, even though it's not clear how what the end game is in terms of business models and revenue streams. It's basically helping the industry evolve in the space, and getting the ecosystem of players within that industry to sort of drive the solutions. So I think that's a trend that's likely just to continue for some time. We may see it go the other way as businesses become more guarded about their own proprietary technologies or blockchains that they're running to gain a competitive edge. But that's definitely another trend to watch. And then finally, regulation and compliance. We could go on about that for days as well. But that's going to be key. That really in a way that holds the keys for a lot of blockchain business models, and for a lot of industries as well, particularly for those that have real life, legal concerns around security. So, for example, in the automotive industry, you've got to be very clear about, what, who's liable if something fails, because that has real world implications. So, take link with another technology like 3D printing. If you 3D print a part and that part fails, well, who's ultimately responsible for that? And I think blockchain will have, is going to play an increasing role there as well in making sure that everybody, is singing from the same hymn sheet with respect to regulating these technologies.
So just quickly jumping back to sort of the conversation around sort of wealth management, how is McKayResearch working with wealth managers to kind of navigate their way through all of the murk and the mire of this space?
That's a good question. From our conversation today, I mean, it's clear that this market is so fast-paced, multifaceted, multidimensional. Any word that you want to, adjective you want to throw at it, it's that.
Superlatives.
Yeah, exactly, and superlatives as well. And the issue that a lot of smaller wealth managers, RIAs and IFAs have, is that they're just not able to keep pace with the shifting kaleidoscope of factors that are driving the evolution of the marketplace. And it's gotten to the point where you could say in 2016, 2017, and even perhaps up to 2018, it could be looked upon as acceptable to bury your head in the sand and hope that the problem would go away. Somehow all the master nodes would crash and the whole thing would just like evaporate into thin air. But I think it's become clear now to these people that, no, that's not going to happen.
Not going away.
B, exactly. And B, I have a fiduciary responsibility to understand the market and to be able to basically advise the clients on its merits as an investment. And, so that obviously they're not unduly exposed to, potential risk factors that could come from investing it in the first place. So where I'm stepping in to help is by providing basically a cross-section of analyses, very much 360 degrees at every level of analysis, macro, meso, and micro as well. So what is the individual doing in terms of storing Bitcoin? Where is Bitcoin being deployed exactly for what purpose? What on the meso level, of course, you've got the level of organization and company. What are the organizations doing? How do they shift? How are they shifting to respond to the markets, both in terms of setting up new ventures, exchanges, companies that are involved in Bitcoin custody or trading activity or whatever else. And then obviously on the macro level, you've got the the institutional investors and then the governments and the regulatory authorities who are again dealing with these constantly shifting factors. So it's a lot to keep abreast of, and I'm helping companies do that basically in a succinct way, in a bias-free way, in a way that saves them an enormous amount of time and effort. Because I've been in the markets, I've got context from other markets as well, so I can speak their language. It's sort of independent in the sense that I don't have any commercial relationships with any exchanges or any financial products that tout Bitcoin in any way. And I think that last point cannot be understressed, given that we all know that this is a sector and an industry that is just so full of people who have something to sell you. And have vested interest in everything else. So independence, I think, is key, and I know that that's something that's valued by my clients. So,
just to close out, kind of last section, I kind of want to get your views on how you see this all going in the future from a sort of blockchain, Bitcoin, crypto perspective. Where do you see this whole industry? You can even talk about Bitcoin, but where do you see all of this going in, let's say, the next sort of 5, 10, 20 years? What's your outlook for this space?
My outlook is positive. It's clear that it's still a young technology. There's still a lot of potential for growth in many, many areas. And as we spoke briefly about in the early part of our talk about, where it's actually being used by people who are less fortunate than ourselves to to be sort of having the luxury sitting around debating use cases. Obviously, it's being deployed in in real life situations where people are like basically less fortunate. So that being the case, I think both on the bottom end, that's a great example. On the top end, there's just no limit to the degree to institutional activity in the space right now, because all the signposts are pointing one way, and that is like a huge ramp up in investment. As I said before, the ETF will be a crucial milestone to watch.
Okay, I'll look out for that.
Already we're seeing all the signposts with respect to the regulations with your Fidelities, your Krakens, the various pronouncements on CFTC regulations and everything else. So it really is pouring in, and the market cap is still negligibly small compared to other industries. So I hate to say the only way is up, but I just think as more interest pours into the market, it is going to increase.
There's a bit of upside in there. Definitely.
There's definitely upside in there. It's still to hedge that position, and I would say that it's still going through a series of price discovery corrections. Yeah. So the volatility is going to be there. The seesaw will continue, but as more money pours into the market, from the institutional end at top, and also from the retail side, it's basically going to start to even out. The same way that gold has evened out over the years. So that will start to stabilize for sure. So it's hugely exciting. It has a lot of potential as an asset class, as a currency, and everything else. So it's a great space to be involved in, basically. From a blockchain perspective, I would say, or from a more philosophical note to end on, I mean, what I'm looking for, again, is sort of the continued rebalancing of the relationship of the individual with the institution. Mm-hmm. So again, going back to this peer-to-peer trustless network of participants, I mean, that's where it really has, its power really lies to basically disrupt that relationship. And I think the reason why it's had so much success is because of the intersection of these different trends, we are seeing political, social, economic, financial trends intersect that are pointing to the individual to want to reclaim some of that control. And I think the more that happens, the more people can, transact value peer to peer, the less importance that's going to place on institutions to sort of do that and pool resources on our behalves. Mm-hmm. And we know that how inefficient that can be for states to do that, to pool resources. Like the pension system is a great example of that. Mm-hmm. So it has a lot of potential to disrupt that mechanism or that relationship. So I'm going to be very, very interested to watch the potential changes happening on that level. And then finally, really the whole microeconomies and the staking, how people are going to be creating new forms of value, basically potentially from at any given point at any given time, how it's completely democratized money and IP and value creation across a whole host of different spaces. So that is going to be, it's going to be really insanely interesting to see how that space develops, because I think that is something that will, in a way, fly under the radar. I think, but before people actually really start to see these dynamics play out in real time in front of them, where they can actually use a product, microeconomy, or they can start to trade like tokens for reserve power that they have in their lithium battery storage capacity or whatever else. So there's so many ways. This is the technology. Exactly. So eventually, what we will see is that they will start to coalesce around certain areas or certain forms of value. But I mean, no, don't yet know exactly how that's going to pan out. But I think keeping an open mind, as I know that you do, I'll be, I'm looking to be surprised pretty much every day. So
yeah, we just got to keep watching. This is moving so fast, and the goalpost moves every day. But yeah, we definitely
nothing would surprise me at this point.
Yeah,
so.
Totally. But James, we've covered so much. We've really covered so much. I feel that I've learned so much. Where can anybody get hold of you, whether it's social media or McKayResearch? Where can we find you?
Well, the best thing is to, first of all, you can email me directly at james@McKayResearch.com, and that's McKay, DKAY, research.com. I will do my best to get back to anybody who contacts me directly. For more information about what we do, go to McKayResearch.com. My Twitter handle is @McKayResearch, and you can find me on LinkedIn as well. For those in the tech space, this week we released a new report, and it's all about the degree to which or how the COVID-19 has impacted the Industry 4.0. So we basically look at how COVID has raised several questions on tech transformation and how it will play out under the pandemic and how it has so far. And so we look at things like mass unemployment, global supply chain shifts, government lockdowns, and how that will accelerate deployment of these connected digital technologies. So that is available on my website. So just head on over and you can download a free copy. And yeah.
Appreciate your time. And so, yeah, thank you very much. And let's keep in touch.
If you enjoyed this video, please like, share, and subscribe. It would really help the channel grow. And don't forget to drop a comment on this or related subjects in the comment section below. Thanks for stopping by.